Welcome to Section 4, Part 1 of the High Velocity IT ITIL 4 Specialist Certification Training Program. We first begin with how to achieve value with digital products. In particular, know how the service provider ensures valuable investments are achieved and the contribution to it from relevant practices. Know how the service provider ensures co-creation of value with the service consumer and the contribution to it from relevant practices. In summary, this section is about the techniques which can be used to achieve the various HVIT objectives, the 5 objectives that is, beginning with valuable investments, co-creation of value, assured conformance, fast development, and resilient operations. We begin with techniques for valuable investments. Identifying and justifying digital investments based on their value, costs, return on investment, and criteria of utility and warranty. This is what the techniques achieve. Also need to consider market research, product quality, and launch timing, and ethics. Continual evaluation is necessary for alternative better investments in the future. For example, if an organization is offering cloud services, then there should be evaluation of whether additional services in cloud are required apart from the basic compute services. For example, data analytics may be an additional offering. So the valuable investments should continually evaluate better investments for the future. Justification may be based on non-profit objectives also, like competencies developed or other strategic objectives. The speed of decisions is important in HVIT. These techniques may support more than one HVIT objective, meaning a technique under valuable investments may support other objectives such as focus on value or co-creation of value, that is. Techniques also contribute to the practices. The service value chain activities are also affected by these techniques. We will look at the following techniques for valuable investments to achieve this objective for high velocity IT. We begin with prioritization techniques like cost of delay, buy or hold or sell, and other techniques. Then we move to minimum viable products and services, followed by product or service ownership, and finally A or B testing. Prioritization techniques. This is required due to variable demand for services. Cost of delay, buy or hold or sell, and other techniques. Cost of delay means the benefits lost by delaying a service activity. This may be based on business criticality of digital products and services. Prioritization may be done at a product portfolio level or at a feature or task level. It is useful in HVIT as investments are significant and market changes rapidly. An example of evaluating cost of delay could be whether the organization should prioritize a self-help tool or a software deployment tool. Which one would have a higher cost of delay? That one should be prioritized first. Buy or hold or sell. This is about deciding the best investment strategy for a product. Buying means improving or extending the existing product. Hold means maintain with least affordable cost. And sell means retire, reduce, or replace the service. So we should not take these terms literally as they are, but they have their own relevant meanings. An example of buy, hold, or sell could be a decision to replace a financial asset management tool or to improve it or to maintain it as it is. Other techniques like stacked ranking, Kano model, net present value, return on investment, fit, feasibility, attractiveness, etc. Stacked ranking, by the way, is similar to something like forcing employees into specific performance ratings. The Kano model is from the 1980s. It is a theory of product development and customer satisfaction. It focuses on voice of the customer to decide product and service features. You could look into other literature for understanding these techniques. For the exam, you have to know the cost of delay, and the buy or hold or sell, and that there are other techniques as well. The NPV, the net present value, it determines the profit by comparing initial investment with the profit at current currency value, not the future currency value. Because as time moves forward, there is also inflation, which leads to devaluation of currency. So it's important to check the future profit amount and translate that into the current value and compare that with the current investment. Let us look at the connection between the various practices with the techniques for valuable investments, particularly for prioritization. Portfolio management helps to continually prioritize the service offerings based on value, incorporating the cost of delay. The last column here indicates the impact of a certain practice with the prioritization techniques. So portfolio management, problem management, project management, software development and management have high impact or connection with the prioritization techniques. Problem management helps in calculating the financial cost of open problems and errors in order to prioritize and direct problem management efforts, comparing the cost of workarounds with those of longer-term solutions. Note that in valuable investments, the organization is trying to assess the value of investments and pick the most valuable investments and prioritize them. Project management helps to calculate the financial impact of performing or delaying project work. Software development and management helps to calculate the financial impact of delaying work on new software features or larger software-based service components and deciding whether to obtain or build software components. Change enablement and incident management have medium impact. Change enablement helps to calculate the cost and benefit of prioritizing and scheduling changes to services and components. Incident management, on the other hand, helps to calculate the cost of incidents and major incidents in order to prioritize work that has the highest economic impact. Release management and service financial management also have medium impact, and service request management has the least impact to the prioritization techniques. Release management allows to calculate the cost and benefit of prioritizing and scheduling releases of new or changed services. Service financial management allows to calculate the time value profile data to provide information for prioritizing service offerings. Service request management helps to calculate and compare the financial impact of fulfilling or delaying the fulfillment of requests in order to prioritize work with the highest benefit. For the exam, it is useful to understand the connection between the practices and how they impact the prioritization techniques. While there is a lot of information, we will see such tables for every technique under every HVIT objective. You may want to reflect on some of the key ones so that in the exam you will be able to make the connection.